Welcome back to the channel, guys, and in today's video I want to spend a bit of time talking you through how to identify a long-term investment. And the reason I want to talk about this is there's a lot of people out there as well who don't have the time or the risk appetite to day trade or swing trade. So this video is really for those people who just want to identify a stock that they can leave in a portfolio for 1 up to 10, 15, 20 years, whatever it might be. Essentially, you don't have to look at it every day and have to worry about fluctuations in the stock price. So what I'm going to do is I'm going to give you 3 key things to follow when identifying any good long-term position. And to be honest, I know this works. It's something that I've used really over the last number of years on all of my long-term positions, from Next Era Energy, Alibaba, Tesla, all of them. So I'm going to share this with you. And obviously this is a bit of a snapshot analysis, guys, right? But this is a very simple way to apply 3 key things that I find are fundamental in identifying any long-term position. So without further ado, the first one is you need to conduct your due diligence, right? And you know, when people throw out the phrase due diligence, they don't really know what that entails. To be honest, there's nothing fancy about it, right? And I'm going to use Alibaba to illustrate the power of these 3 mechanisms that I follow. So in terms of the first one, due diligence, it's just really market analysis, and it can be anything as simple as Googling Alibaba stock price, or going on to some of those key websites that we use such as Market Watch, again even going on to CNBC, or just Googling the ticker. So for example, if we were taking Alibaba, you might go on to marketwatch.com, type in the ticker BABA, and again guys, you can see here all of the latest news that people are talking about, what analysts are saying around Alibaba, what's driving the price up and down. Now I obviously have Alibaba in my long-term portfolio, but this gives you a very good snapshot analysis. On the left hand side, some of the intraday and 52-week range data. Just down the center, you've got recent news, and then again on the left hand side, you've got other things there around your PE ratio of 26.28, short interest, average volume. Really interesting and really beneficial indicators that you can use. Analyst ratings as a buy, so you can do a really simple market analysis and your due diligence by just literally Googling what the ticker is. Go through a few different sites, make sure that they're all painting the same picture. There's no discrepancies in information, that essentially when you come away from doing a very brief market analysis, you know that this stock is safe. And that is ultimately the big thing when you're conducting due diligence. You don't want to be going into any of these, sort of Ponzi schemes, any of these pump and dump penny stocks, these speculative plays. You want something that you don't have to worry about when you go to bed at night. You can wake up and you know that your money's still there and it's gradually making you those extra percentages. So that is the first piece, due diligence. And as I said, plenty of ways to do it, guys. I'm not going to overcomplicate it, but it is just as simple. Pulling open an Excel spreadsheet, typing the ticker, having a pros and a cons list. You can even use our latest video. I'll put a link up here where you can literally go through all the pros and all the cons and weigh up whether it is a good long-term investment. So that is point 1, conduct your due diligence. And that again can be done through Googling the ticker, going onto the company's website, going onto some of the forums, Stock Twits, Wall Street Bets, again, just to give you an indication of the full end-to-end and give you a holistic view in terms of what exactly this company is and how people perceive it. See if that fits your expectations of what you want from your long-term portfolio. Moving on to the second key component when I'm trying to identify a long-term opportunity, it's fundamental analysis. Now, you don't have to be any CFA, you don't have to be an accountant to do fundamental analysis, guys, alright? There's a lot of people out there who will overcomplicate what fundamental analysis is, but I'm going to show you, and I've shown this a lot in our previous videos. Again, I'll put a link up above if you want to look at fundamental analysis. But there's very simple ratios and indicators you can look at to sort of paint that picture of the balance sheet and the income statement and get a rounded picture in terms of the financial health of the company. And what I do for most of my plays, again, you can use marketwatch.com, guys, right? It gives you a lot of the key indicators there, but I'm going to use Yahoo Finance. And using Alibaba to illustrate the example, you come onto their company page, you're going to hit statistics, and it's going to pop open this page here. Now there's a lot of information here, but I'm going to show you some of the key indicators, profitability margins, percentages, and some of the key financial metrics that you can use to identify if it's a good, fundamentally strong company. So the first thing I always like to look at is firstly the trailing PE ratio. And the P ratios in general, guys, give you an indication as to whether the stock price is overvalued or undervalued. Essentially anything below maybe 15 to 20, and it does depend on the industry, gives you an indication as to whether it's expensive. So using again Alibaba as our illustrative example, you can see it's got a trailing P ratio of 25.21, forward P ratio of 19.21. Again, going back onto Market Watch, you can actually see the P ratio here is 26.28. So in my opinion, that's actually quite good. I consider that fair value. Some people might even consider that undervalue in comparison to maybe some of the competitors. Amazon, for example, I believe is around a 70 to 80 P ratio. So there's value there. That's the first key indicator. One thing I will point out with the P ratio, guys, is just because a company has a high P ratio, again using Amazon, doesn't mean it's a good buy. The P ratio simply means that you're paying more now for future growth. So Amazon obviously has a lot of future growth, so therefore shareholders are willing to pay that little bit more to buy the share price now. So when we look at 26 on Market Watch, I consider this good value for the long-term growth of Alibaba. Moving through, there's a lot of things here, but I'm going to take you through the key ones or the key metrics I look at. So again, profit margin 24.71%. That's a very strong profit margin. And again, operating margin 16.63%. Personally, I always look for profitability margins above plus 15% in my long-term portfolios. So both indicators here are passes. I then go on to return on equity. So this is a key one for shareholders, okay? This is basically showing you the effectiveness of Alibaba's senior leadership team to grow the company for shareholders. So you can see here again 15.65. Again, I use 15 as a rough estimate, so it beats on my estimate, so this is a good indicator. So it beats my estimates of 15.65. It hits another pass. We go through again on the income statement. There's a few things here really, but you're looking at the quarterly revenue growth year on year, 36.9%. So you're essentially looking at, again, the company has grew by 36%, year on year, and that is incredible growth when you're looking at a long-term investment. You look at the quarterly earnings growth year on year, over 52%. So that is very, very strong. That's what you want in a long-term play, because there's growth there, that the company is continuing to grow year on year, quarter on quarter. Their earnings reports are continuing to grow and show the long-term growth trajectory of the company. As we move down again on the balance sheet, what I'm looking at here is really one key indicator, and that's the current ratio. Now, the current ratio, guys, is basically current assets versus current liabilities. So it's essentially everything the company owns versus basically all of the debt or all of the liabilities that the company has on the balance sheet. So anything typically more than 1 is positive, in that you can see here the current ratio is 1.67. That means Alibaba has got 1.67 times assets over liabilities. So essentially, if they liquidated everything, they would have more assets than they would liabilities. Now, I've seen a lot of companies with stronger current ratios. For example, I think Microsoft has got a current ratio of 3. But again, 1.67 is a fundamentally strong current ratio. So I like this. Again, it's a pass here. The last thing I look at here, and there's another section that looks at it, guys, is your 52-week high and low. So you can see that the stock price now is 222.69. I can see the 52-week high is 319. The 52-week low is 189.53. And essentially, when you marry it up, it's closer to the 52-week low than it is the 52-week high. And the reason I like looking at that is essentially showing me, okay, is there value in the company? What's the risk versus reward if I weigh it up? And right now, looking at the current price to the 52-week low, I can see there is more reward than there is risk in this investment. Again, it doesn't really matter if you're in it for a long-term trajectory, but in terms of an entry price, if you're a bit tight on cash and capital investment, this is a good indicator to see if what you're buying right now is good value. So that's a very quick look at the balance sheet and the income statement and some of the valuation measures. The last thing I do like to look at, when you click on holders, it'll show you major holders breakdown. And the two ones that I always look at is the amount held by insiders and institutions. So you can see 10% of all shares are held by insiders, or essentially employees of Alibaba. So that could be, their executive suite, that could be some of their chief executives, things like that. And again, just under 40% is held by institutions. So that's always a good indicator if institutions are holding it. So you look at top institutional holders, BlackRock, Vanguard, State Street, There's some really big investment companies here that are buying it, again, mutual fund holders. So it paints a positive picture again that this is a company that other big institutions, other big hedge funds are buying, and again, for a long-term portfolio, that's obviously very important. So that concludes our second key component of identifying any long-term position, and that is fundamental analysis. So we've now covered off due diligence, fundamental analysis, and the third piece, guys, is basically your own preferences or your capital allocation. How much you want to put into this stock now versus what you want to put into it over the next couple of months or years. So what I would say is this is completely at your own discretion, and you can use even our previous video, again I'll pop a link just above here, to help identify entry and exits and how you can sort of add to your position over a period of time. What I would suggest here is obviously looking at, one, what is your time horizon? So if you're a student, maybe you've got 20-30 years, you want to actually look towards liquidating these shares, or are you in your middle 40s or 50s, you've got a family, again, you don't really care, but it's something you might look to liquidate maybe 10-15 years when your kids are in college. So it really does depend on your time horizon. The second thing I would say, guys, is look at, and this is something that I sort of follow, is dollar cost averaging. Now this is something that Warren Buffett talks about a lot, and what he means is every month you put in the same amount of capital to buy the same amount of shares, and what that means is every month you allocate the same amount of capital towards buying shares in that company. So essentially you're buying the highs, you're buying the lows, and in theory what happens is you're accumulating more shares while also buying the averages on the share price as it increases. And I think dollar cost averaging is particularly useful, probably the only way to go when you're looking at long-term investing, because as I said, it allows you to accumulate more shares, it allows you to buy the dips, and again it puts a bit of consistency into your investing strategy. So I would suggest, if you haven't already looked at it, checking out some of our videos where we talk about fundamental analysis in a little bit more detail. We also talk about how to identify an entry and exit price, or it's actually the €1,000 SOYS Investment Group portfolio challenge. But there you have it, guys. They're the three key components, the three key things that I really look at when I look to make an entry in any new long-term investment. So just to summarize again, 1, your due diligence doesn't have to be anything fancy. 2, fundamental analysis using the Yahoo Finance statistics tabs. And 3, your capital allocation, or how much you want to put into the stock now versus over the next few months. Again, suggesting dollar cost averaging. So there you have it, guys, a very simple way of how to identify any long-term investment towards helping you become more financially independent. And with that, guys, if you enjoyed the video, please hit that thumbs up button. If you haven't already done so, please subscribe to the channel, and if there's any questions, please feel free to leave them in the comment section. Just a reminder, guys, that our Discord channel is now free for all public access. You can get the link to it in the bio, or follow us at SOYS Investment Group on Instagram. Until the next video, thanks a million, guys, and take care.